As the Bank of England once again declines to reduce interest rates, a Witness Warehouse deal shows how the hunt for secure rental income is dominating investors' minds. I'm David Thame, Analysis Editor at Place North. In today's Place podcast, we'll look at Northern Real Estate's redoubled effort to secure rental income in the face of interest rates that'll be higher for longer. We'll also take a look at some entertaining plans in Liverpool and await tonight's election results for a new crop of Metro mayors. Boundary Point in Widnes is the kind of perfectly decent but uninteresting 49,000 square foot shed that wouldn't generally make it to an official London Stock Exchange announcement. Yet it's just scored its second London Stock Exchange appearance. The first came when the unit at Halebank was let in June 2018 on a 5-year lease at a rent of £216,000 a year. The announcement was by its new landlord, Warehouse REIT. Now, a new lease has been signed with an engineering equipment business, adding £325,000 to the contracted rent. That's 50% up on the previous passing rent. No wonder the landlord trumpeted the achievement in its quarterly stock exchange update. Widnes isn't an isolated example of this kind of rental uplift. Warehouse REIT reported rents up 38% on its new lettings, 17% on renewals, and 27% on rent reviews. A tribute, of course, to the way the world has changed since the pre-pandemic days of 2018, when that Widnes unit was first let. This kind of growth is a one-off boost, but it's still well worth having. The Widnes news comes as a raft of results suggests rents are looking okay and valuations less stomach-churning. Here's a for example. Grosvenor, the Duke of Westminster's property business, has been edging into regional offices. It owns 87,000 square feet at Toronto Square in Leeds, and its 217,000 square foot Manchester portfolio includes the Hive, Ship Canal House and Canada House. 2023 financials released by Grosvenor this week showed the portfolio devalued by about 2.7%. That's over the whole of their portfolio, including London's West End and international investments. And that's a shade less than one might have expected. It's not really a good performance, but it's not a bad performance. However, the real fun was recorded revenues, which are looking good. The UK arm of the property empire delivered revenue profit of £35.4 million. 8 million up than the 27.4 million achieved in 2022. It's not just inflation pushing it up that much. The report commented in the way these reports do that, and I'm quoting, the principal driver of the improved performance was rental growth derived from leasing events, reduced voids, the new flexible office portfolio, and reduced expected credit losses on rents receivable. In other words, more people paid more rent in a more timely way. The hunt for revenue, good, strong, reliable revenue, is a theme everywhere you look. In the last few days, British Land have been scouring the country for more retail parks. Texan real estate giant Hines is on patrol for data centres and self-storage opportunities. And LGIM are suddenly creating a student housing platform. Revenue is the name of the game for them all, and it's not hard to see why. If interest rates stay up, and we have to wait until July or August for the first 0.25% cut in rates, then what matters is the profit and loss account, and not so much the balance sheet. Revenue is also the name of the game for overseas investors, particularly US investors, for whom investing back at home isn't terribly appealing. The US commercial property scene is flat on its back, and the US office market is worse than that. It's 6 feet under. And the UK offers genuine income in a market where valuations appear to have bottomed out. Exchange rates are also helpful to US investors. Inevitably, London scooped most of the first quarter US investment, netting a cool £3 billion. And let's just pause here to point out that that's very nearly double what it was in the previous quarter. However, BNP Paribas Real Estate, who track these things, say the effect is spreading out of London and will get a little further in the second half of the year. Investors are encouraged by the rental growth prospects, BNPR said. May is traditionally a month for gathering and rental gathering is going to be what a lot of northern landlords and investors are focused on this month. And now your weekly rundown of what's going up and what's heading the other way in the Place North elevator. Doors closing, going up. Two cultural developments in Liverpool, both of which made some sort of progress this week, prove the point that in the world of drama, happy and sad are two sides of the same face. Efforts to transform the Littlewoods HQ at Speak into a film studio have been going on for 7 years, at least 7 years. In 2017, Capital & Centric stepped in to rescue a long-becalmed residential and hotel redevelopment of the 180,000 square foot landmark. They found an operator, Twickenham Studios, signed in 2018, and they recommitted to the scheme after the devastating fire that took place that year. They won planning permission in 2020, and a chunk of funding was awarded in 2021. Then the anchor tenant started to drop away, starting with Liverpool John Moores University. This week, Broadwick Group, who already run Manchester's New Century Hall and Depot Mayfield, the former Mayfield station, was associated with the scheme, although Capital & Centric wisely kept mum amid speculation that Broadwick wasn't the only interested party. The trouble all along has been it's not entirely clear the film industry needed big studios in Liverpool. Now, it's not that they don't like Liverpool. In fact, they love Liverpool. It's just that what they like about Liverpool is Liverpool, not studio space. Meanwhile, the economics of the big streaming content producers, Amazon, Netflix, you know their names, have gone up and down and sideways. Currently, the market is consolidating and production budgets are falling. Fingers crossed the Littlewood site finds use, although it may not be quite as film-centred as anticipated. Meanwhile, in Liverpool city centre, the charitable foundation created by the late comedian Sir Ken Dodd has launched its most ambitious project to date. Despite the dodgy branding and a little shrine to the great man on the third floor, this is essentially new rehearsal space plus a cafe for the Royal Court Theatre. The proposal, which includes a giant loo brush resembling tickle stick outside, breezed through planning, a surprise to all of those who watch the city's unpredictable planning committee. Perhaps the planners agreed with below-the-line comments on Place Northwest about Sir Ken's worldwide appeal. Could this be another tourist attraction for tourist-dominated Liverpool? Well, we have a look at the data insofar as Google searches over the last 5 years can give you an indication of popularity. Sir Ken's star is waning. It's a gala day when there's more than 10 searches across the world for Sir Ken's name. Mostly it's 3 or 4 searches a day. That said, searches are very high proportionately in the Isle of Man and Jersey. Coincidentally, or perhaps not coincidentally, these are the two places where Doddy hid suitcases of cash before the unfunny tax people caught him. The UK and Ireland are also in the top 5, along with the Isle of Man and Jersey, and so is St Helena, the microscopic Atlantic island that only recently got a reliable internet connection. No doubt the Saints are catching up on the news about Sir Ken's death in 2018. A mighty crop of new Metro mayors get elected today. Results will start coming in over Friday and Saturday. Liverpool City Region, Greater Manchester, Tees Valley, West Yorkshire and South Yorkshire are joined by a new North East mayoralty embracing Durham, Northumberland and all points in between, and an equally vast York and North Yorkshire mayoralty doing exactly what it says on the tin. Should property people get excited? Well, the new York and North Yorkshire mayoralty comes with limited powers over property and planning. These include useful power to indulge in some house building and the creation of mayoral development corporations, but there's no strategic planning power. However, the new authority, like all the others, will have some control over transport, and that's an important downstream of property policy area with all kinds of land use implications. duelling the A64 around York will be towards the top of the new mayor's in tray. The reliable think tank complaint is that mayoralties tend to under-deliver because they're underpowered. This slightly misses the point because they were designed to be underpowered. It's local councils who retain the whip hand on everything and don't plan to give it up to some egomaniac mayor. That's how politics works. So to all the mayors, don't expect fireworks. That's it for this week. We've seen how another year of high interest rates is pushing investors to look for reliable rental income, had a giggle with Doddy, and shouted hear hear to half a dozen new and re-elected Metro mayors. From today's Subplot will be going monthly and we'll be back on Thursday the 6th of June. In the meantime, for more about the built environment in the north, visit placenorth.co.uk. I'm David Thame, and thank you for listening.